The rate at which the cost of living is rising is continuing to accelerate. The Consumer Prices Index hit 2.7% in April, up from 2.3% in March, and that was the highest rate since September 2013. It highlights the strain facing many British households as prices are now rising more rapidly than earnings. Pay levels rose by just 2.2% in the 3 months to February, and the latest figures due out tomorrow are expected to show a similar picture. Well, Sarah Hewin is the European Chief Economist at Standard Chartered Bank and joins me now. So, Sarah, there were a lot of one-off factors last month, not least the timing of Easter, which pushed up airfares. Is this a one-off blip or is there more to come?
Well, as you mentioned, there were one-off factors. Easter was in April this year. It was in March last year. Airfares were higher this time round because of the Easter effect. And I think that there was a seasonal effect as well, which drove clothes prices higher. Also, of course, we saw taxes, excise duties, car duties rising in April.
And alcohol and tobacco as well.
Absolutely, yes. Now, so these are factors that probably just relate to April. However, there's some other issues which will continue on. So utilities raised prices for energy, and we're starting to see the impact of the weaker pound and the impact that has on high import prices. That's finally being passed through to the retail sector.
Although, interestingly, goods price inflation actually moderated while services inflation rose during the month. I mean, goods price inflation obviously impacted more by a weaker pound because of the amount that we import. I mean, could one say that that's peaked in terms of manufactures yet?
I think that there is still more to come. I think the moderation that we saw may be due to the fact that energy prices didn't rise so much this time round as in the previous month. But we still have several months, I think, of high import prices coming through. The services prices rose, and I think a lot of that was down to the higher airfares.
Yeah, 3% I think during the month. I mean, sterling's actually rallied by some 3% against the international basket of currencies since the end of March. Any chance that that's going to start bearing down on inflation anytime soon?
Well, it should limit the extent to which inflation accelerates, but the Bank of England still expects to see inflation slightly higher. Their forecast for later this year is 2.8%, and in fact, it could go as high as 3% or more, according to the Bank of England's own forecasts. So it very much depends what happens over the next few months if we see the pound weakening off again. But that impact, the post-Brexit impact, will take several months to feed through.
And that's a really interesting point you make there. The Bank of England has said it's going to look through this rise in inflation as a sort of temporary phenomenon. I mean, how high does inflation have to go before the Monetary Policy Committee turns around and says, right, we've got to raise rates?
Well, they have warned that if the economy grows at a reasonable pace, and certainly if wages start to accelerate, if it looks as if inflation is starting to become embedded, then they've warned that they will act sooner rather than later to raise interest rates. But at the moment, the market is not expecting the first rate hike to come until 2 years' time, so 2019.
So briefly, you think even though inflation could hit 3% this year, the bank will just look through that and carry on?
Yes, in a sense, what they feel is that high inflation squeezes people's spending power. As you mentioned, earnings growth is much slower than inflation, so the overall effect could be dampening rather than inflationary.